Hey there, this is Denise LaFramboise. I'm your host for Real Stories in Real Estate. Today I have Robyn, Yack, and Cheryl Koffman, and they're going to share a product that they've been using, rent to own product, and how it works and who it might be great for. So thanks for joining us today.
Thanks so
Thanks
much
for
for having
having
us.
us.
So I guess let's jump right into it. So rent to own.
It's
This is a
exactly what
product,
it sounds like.
yeah, right? It's simple.
You're
And
renting to own.
And we do see more people asking about this type of thing because houses are expensive, but more so, especially say in the GTA, GVA, like they are more expensive versus like the down payment versus what you actually make in a year. This is the challenge, right? How do you get into a home if you can't save a down payment and rent in the same neighborhood, right? How do
Mhm.
you actually get in there? I mean,
Yeah, it's tough. It's very tough right now. You know, I think rent to own is a great alternative for people who can't get like a typical mortgage through a bank. They get rejected and then they sort of, you know, throw their hands up and say, okay, so that's it. And then we say, no, we have a solution, a different kind of solution for you that only requires 5% down payment as opposed to like a 20% down payment. So, and it does require stable income. So you have to have an income of about 80,000 plus in terms of like combined family household income. And the program typically lasts for about 2 to 4 years. And then you own your home at the end of that time.
yeah, and I think for people to understand kind of where this gap is, if we want to qualify for lowest rate bank mortgages with lowest down payment, we can do that at 5% down, but not when we have issues with credit, or maybe
Hmm.
we don't quite have enough income to qualify, or it's a post divorce situation and we have some
Yeah.
support payments going on, something that hinders us from qualifying. These people can qualify with alternative lenders or some of our unique kind of specialized products um, with credit unions, but they have to have 20% down. And
Right.
Mhm.
so there's these gap of these great people who can buy a house, but don't have the down payment to fit here, but don't have whatever it is figured out to fit here. And so
Right.
this is the gap where these people can really fit and essentially get ahead instead of waiting until they've got the down payment
Right.
or until they fix whatever that the credit issue is.
And to expand on what you said, it's great for students who haven't built up credit yet. It's great for people who are self-employed who don't have consistent credit. It's great for people who are new to Canada and let's say waiting for permanent status and but don't have any credit here. It's good for people who have gone through bankruptcy or consumer proposal or have credit ratings under 680, like people who will have difficulty, going to typical banks to get mortgages.
Yeah, and all of these people have options, but only with a higher down payment, right?
Right,
Right.
right.
And so
Right.
this is a way of sort of a forced down payment savings while being in a property that you will eventually own.
Right. Right. And the advantages are, you get to in the program that we work with, you get to choose the house and the community that you want to live in. So it's not a preset, okay, here's a building, you have to live in this building to, purchase that condo. It doesn't work like that. You say goodbye and essentially to landlord uncertainty because you're locked in to a lease agreement with the investor that's purchasing the property on your behalf. There's no increase in rental fees, so you know exactly what you're paying for the next 2 to 4 years. You can improve the property however you want, and any improvements that you do to the property, they benefit you as opposed to your landlord in a rental situation. And you also have the benefit of a certain portion of your monthly rent payment gets given back to you if you're on time to go towards further towards your down payment.
Like a forced savings portion. What's also interesting about what Robin was just saying is that, when you're in a typical rental, landlords can raise you whatever like in Ontario, whatever the government rate is this year, it's 2.2%. In the rent to own, you're actually locked into your fee for those 2 to 4 years. So you're not
Yeah.
raised over that time. Yeah.
And I do see a lot of rental uncertainty right? Like you rent for so long and then
Mhm,
okay, your landlord's selling this place, then you move here and now
mhm.
the landlord's kid's moving in. Now you like it can cost you a lot to jump around and just
Right.
the stress of not knowing where you're going for your family can be,
Mhm.
a significant benefit to have that stability.
Hmm.
So I can see that as a real benefit as well. Like we often get calls of people, "Hey, can I buy a house?" Because they were in a place, they thought they were staying there, they had a plan for 2 years, 5 years, whatever it is,
Right.
and now the plan has changed, right? Like, your landlord's decided to sell or their situation has changed.
Yep.
Now
See it
what,
all the
right?
time. Yep.
Yeah.
And also, it's a very good, alternative. So Robin and I also specialize in dealing with divorce and separation in real estate, and it's actually a really good option that we give those clients because often, their credit has been damaged from their spouse or, they're not sure what their next move is. They don't have enough to put a 20% down payment down, because they're having their own credit issues. So this is also an alternative that we use a lot with our divorce and separating clients.
Yeah, I can see that too for, like, to go from 2 people household to 1 person household, but you wanna stay in the same neighborhood.
Right.
Right.
Right, and often you're in a neighborhood where the houses are more expensive than what one person can get to, right?
Mhm.
Right. And
So
often people don't want to go from home ownership to renting. They feel like
yeah,
it's such a step down. So at least this way, they still can have the pride of ownership because ultimately that's the goal.
Yeah.
awesome. And then so people are staying in the home, they're making their payments regularly, and then the ideal is gonna be in the end that they're going to qualify for a typical mortgage and now they own that property, right?
Right. And that
Correct.
purchase price of that home is set when they enter into the rental agreement. So they will know today, and that price is generally only around 4.5% higher than the current market value. And so they know now. It's not like the uncertainty of, okay, well, I'm gonna rent, I'm gonna save my money, and I'm gonna buy a property in 5 years. Well, in 5 years or 4 years, that property could go up 10%. Here you actually know exactly how much it's gonna go up. So that gives a bit of certainty as well.
Mhm.
Mhm. And then if there is sort of price fluctuation, right? So we've seen in the last 5 years, like, prices have not been very stable, steady as
Right.
much as they were in the past or vice versa, right? And I think it's important for people to recognize that there's been times where houses have been worth way more than they were in 5 years, and then there's times where they're not worth as much in 5 years, right? But,
Mhm.
like, overall, that home ownership journey, if you own that home for 10 years or longer, it will be around that 4% that you're talking about,
Yeah,
right?
absolutely. Absolutely.
And so typical people that you've seen or that you guys have helped with these types of agreements. So you mentioned divorced people.
Yeah, we've
So
done that.
we actually just worked with, a woman who was recently divorced, and she was moving out of the house. She was lucky she had a lot of family support. She wanted to stay in the area that her kids 3 kids, wanted to stay in the area where her kids go to school, and so she applied to this program, she qualified, she got her, that there's an amount that you're allowed to spend. I think her amount was around 850 or something like that, and then we sent her listings like we would any client, and then we took her out and showed her those listings, and she picked the one that was right for her. She had a time crunch too. She needed to get out pretty quickly. I
Mhm.
think she only had like
Yeah.
a month or 2 that she had to leave, and we worked with her and the company worked with her, and we got her into that home. She's thrilled. She stayed in the area she wanted. She picked the house she wanted. Her kids can still go to the same school, and, that's a typical client going through a divorce. I think her family helped her out with the deposit, with the 5% down deposit that she needed, and it worked out great for her. So she's in that home now for probably about 2 to 4 years.
And the other thing we do is, so for a lot of people who come to us, like, so a lot of our kids are in the age group in their 20s, right? And they're struggling. And so the first thing they do is say, okay, well, I'm going to go rent. And
Mhm,
when they come to us, what we can provide them is scenarios. We actually, like, we just did this with these two sisters, and we gave them they had significant savings. So we actually walked them through and we connected them with a mortgage broker, and we did, this is the situation if you rent. This is the situation if you rent to own, and this is the situation if you buy. And it was just nice so that they could make an informed decision. Their parents guided them. And, we're not discouraging you from doing anything, but our whole thing is we want to provide you with all the knowledge so you can make an informed decision.
Yeah. See the
Yeah.
big picture, basically.
Well, and I think the other piece of it that this kind of addresses that people forget about is even to see the scenario you just had where they've got like a significant down payment. We still do see people buying pre-built properties, but
Hmm.
like you still have to maybe pay rent for the whole, 3 to 5 years until that thing is built, right? So
Yeah.
this kind of does address that you also need somewhere to live if you're not living with your
Yeah.
parents for free, right?
Yeah.
Exactly.
And
Yeah,
actually,
I
and
these
just
I
know
two,
that,
yeah,
sorry,
go ahead,
Cheryl,
Rob.
go.
No, I was just going to say, and these two sisters actually ended up renting. That was the right scenario for them. But here's the thing, we walked them through, you know, all three scenarios, what the payments would be for the same amount of money. And like they were so informed, they were so grateful that they had all that information and didn't even know the rent to own option existed. So
yeah.
it was just about giving them the big picture and saying, okay, now then they sat down with their parents. And like Robyn says, we deal with a lot of people in that age group because they haven't built up credit yet. They're just getting their first jobs. They're just coming out of university. And the parents don't necessarily want to put down, you know, that much money on top of, for their deposit. So only needing a 5% deposit for rent to own is helpful for the parents too, who might have their own money issues and money
Or
crunch
more
that they
than
don't
one
want to
kid
deal
to
with,
help, right?
or more
Exactly.
than one kid to help. Exactly.
Yeah, well, and we are seeing so many parents have to help now, right? Whether it's
Yes.
like doing a line of credit or reverse mortgage or something on their house
Hmm.
to give down payment or
Yeah.
possibly co-signing or being a guarantor, right? Like there's a lot more parents needing to help these days.
Yes.
Yeah.
Most of our dealings with younger adults, the parents end up co-signing or, almost always.
Yeah.
Yeah, but this
And
could
that,
be a good option instead
yeah,
of that to allow the parents to still have their financial independence and not be hindered with what they can
Yes.
do with their own mortgage or their future purchases or cottage or whatever they're going to do, right? Like co-signing isn't always the best option for them if
no.
something else
Right.
like this
Yeah.
exists for their kids, right?
Yeah.
Exactly.
Yeah. I was just randomly talking with a mother. We were sitting by the pool one day. And when she heard about this, she was like, oh my God, like my kids, her future kids were getting married and they made good income. And she said to them, well, I can either do a wedding for you or I can give you a down payment for a house. I
Right.
can't do both. And then she said,
Right.
well, and of course they chose the wedding because kids are dumb.
They're
Well,
kids.
I did the opposite. We bought a house first and I got a wedding later. I didn't care about a wedding,
Right,
Yeah.
but most kids
right?
are dumb.
Yeah.
But, when she heard this, she's like, "Oh my god, that I think I can do that for them." Like a
Yeah.
5% deposit or down payment, that I
Yeah.
can swing. It's way better than 20%. So it really is, it's about educating people. And again, like, Cheryl and I really, you know, it's not about the transaction. We are not transactional real estate agents. We are about the journey and giving our clients all the possible opportunities and education so that they can make the right decision for them right now.
Yeah, well, I love what you said about laying out all the options. Like,
Hmm.
we live our lives doing math like that all day, right? Here's your
Yeah.
three
Yeah.
options based on the math. But it's very different if you're just saying, yeah, there's a house in front of me. I love that house. I want it versus actually looking at what it costs you and
Yeah.
if you're comfortable with that, right?
Yeah.
Exactly. And I
And
think what I
some
like
people
about the
think,
rent,
sorry.
go ahead. No, I was going to say, I think what I like about the rent to own is that, you know, people have a budget like any buyer and they get to choose the house and the area that they actually want to live in. That makes people feel like, this is something I want as opposed to something I'm being forced into or have to take because I'm desperate. Having those options, it makes the whole world of difference for
Right.
buyers, really.
Right.
Well, and
And a lot
sometimes
of
buyers will
people,
say, then, like, why would an investor do this? It's like, well, like, have you ever been a landlord? Like, to pick a landlord,
mhm,
like a tenant who loves the house and wants to own it eventually and will take good care of
Right.
it. like that's a huge win for a
Of
landlord as
course.
Mhm.
well, right?
Absolutely.
100%.
And these landlords are not in it for the money. This is not a place like this is not investors who are looking to make a big buck. If you're looking to make a big buck, this is not the avenue to do it. These investors are really looking to help people get into home ownership. And that's why we love, bringing the two parties together because, you know, ultimately the end goal is you've helped somebody and they are now in a home that they wouldn't have otherwise been able to get.
I love that. And so if people want to find out more about this, how can they find you guys?
They can check us out on our website at Robyn, ROBYN, and AND, Cheryl, CHERYL.com. We're on Instagram and Facebook at Robyn and Cheryl Real Estate. They can email us at Robyn Yack, YACK, at gmail.com. Yeah, all of our information's on our website anyways.
Amazing. Well, we'll share that with them. And thank you so much for what you guys do. And thanks for joining me today.
Thank you so
Thanks
much
so
for having
much.
us.